impressive actually the commentary, because the company is definitely not just hopeful of a good demand momentum in the domestic market but internationally as well, with respect to the kind of deals that India has signed recently. LG Electronics wants to win the markets, but what are their big plans going ahead? Let's try to decode all of that, and we are being joined by the management of LG Electronics onto the show. Let me welcome Mr. Sanjay Chitkara, who is the Director and Co-Chief Sales and Marketing Officer of LG Electronics, as well as Atul Khanna, who is the Chief Accounting Officer, is also joining us. A very good morning, gentlemen, and thank you so much for your time. And firstly, let me come to you, Sanjay, and have a word with respect to the number performance, because it's the second consecutive quarter where we have seen some bit of a pressure in terms of the earnings. But the company has also given a very strong guidance in the times ahead. Help us understand what is giving you the confidence at this point in time. Are we already seeing some green shoots in the month of January and February?
See, the current result is not a reflection of LG business weakness. It was more of a broader industry issues, as our industry was already facing a cool summer impact where partners' inventories were higher, and Q3 is a very small quarter for us, 16 to 17%. So we decided to help our partners to correct their inventories. In this context, we avoided overbilling to them and focused on inventory correction. So it was a deliberate short-term adjustment for Q3, which will help us to strengthen our fundamentals for quarter four. Now talking about Q4, so we are getting a very good demand signals, and Q4 is a big quarter for us that contribute roughly 28%. And structurally, it's a support by seasonality factor, and we will have a better operating leverage. As mentioned, the demand visibility is better, and affordability of our products has improved with the GST cut. And we have also given many new segments where we were not operating earlier, like French door or bottom freezer. Fixed speed ACs were not there, that we have supplied. Less than 1 ton capacity ACs we have introduced, where we were not present. And apart from this, we are entering to a new business of chest freezer also, which was not there earlier with LG Electronics. So our essential series is also, we are getting a good traction for that. So the early indications are that in January we performed much better than last year. So we believe this growth momentum will continue, and we believe that we are likely to have a better results in quarter four. Apart from this, there is some announcement about the tariff things, and the many new opportunities are evolving with EU FTA deal also. And LG is a global brand with a global demand, and the company like LG Electronics, who has Make in India capabilities, will be highly beneficiary for this. Our third plant is already on the way, and it will be operational sometime in next year, October. And from there, we will further expand our export. Currently, it is roughly 7% of our overall revenue, and in time to come, we will further expand it.
Just to correct here, this year, October, our third plant will start with the
sorry.
first line of operations.
Yes, sorry.
All right, gentlemen, thank you so much for the detailed answer. But Atul, now let me have a word with respect to the margins. The commentary remains positive, but in quarter three, your margins have compressed sharply. We did read the press release. We are aware about the things that you have highlighted, what really made these margins compress at this point in time. But what's the visibility that you will bounce back to those levels of 6 to 7% maybe? And what, as per you, will be the normalized margin band range?
Just to highlight, you rightly mentioned that our margins have come down, and we have never seen in the past also. This was one of the quarter where we have this impact has given a pressure on our margins. and that too with a softness of revenue, which impacted operating leverage, number one. Number two is that there is a one-time impact also due to the new wage code, which was being implemented from this quarter only, where the past service cost expense we have accounted for in the form of employee cost. And there is another impact of advanced pricing agreement, which we have signed with the CBDT, Government of India, where we have uh, our contingent liability towards transfer pricing litigations and royalty payments to our parent company. We made it zero after signing that advanced pricing agreement for 9 years, 2014 to 2023. And this is one of which has impacted on our PAT also. Apart from that, yes, there is an impact of RMC mix impact as well as the FX burden, which particularly we tried to recover that, but it was not, due to this summer season, due to the season of quarter three, which was got slow during this after Diwali. We have continued with some investments in the market to keep our partners' momentum high, confidence high. And going forward, if we talk about FY 26 as well as the quarter four, we are very much confident that with the sellout trend increasing, we have seen January results, though we cannot call it as a number, but we have seen a very positive trend. So with that, we would be remain consistent in our margins in the early double digit EBITDA margin, we can say, for the quarter four as well as the full year FY 26. And FY 27, as Sanjay ji explained, on the new product launches we have brought in, where the categories where we were not present, that will add on to our top line, as well as it will give an operating leverage benefit also along with the exports.
All right, that's good to know. But Atul, just a bit more follow up there with respect to the margin outlook. That is really good. But this time around, though your margins were compressed, on the flip side, you have actually gained market share across your key categories. What's the current strategy? Are these market share gains on the back of some sort of a compromise with respect to margins? Is that the current strategy? And going ahead, what will be the priority? Will that be market share? Will that be improving the margin profile of the company?
So, just to highlight here that we normally do not compromise on market share. Our strong fundamentals remain the same, and we will try to capture the market share going forward again, as we have done in year 2025. So this will continue, and our focus always remains on the fundamentals to be a sustainable top line growth with a more sustainable margins in the double digit EBITDA margin.
Digit EBITDA margin, but very quickly, if I can have a word from you, Sanjay, on the recent FTAs that have been signed. You have come out with a very positive commentary, but these will take time. Maybe in the next couple of years, everything will be finalized. But how much of an incremental volume do you believe these FTAs can help for LG Electronics?
So, firstly, before going to FTA, you see, we are a 28 years old company, and in past also we have seen some short-term challenges. But over the period, we have fostered a culture of long-term thinking. We strengthen our fundamental in this quarter and improved our market share. In across all categories, this year we improved our market share. Talking about FTA, so recently these opportunities have arisen, and as I mentioned, we have a global presence and global demand, and which will strongly drive our export. Currently, our export is 7% of our revenue, and amount wise, it is 160 to 170 million US dollar. But our third plant will be operational this year in October. From there, we will further expand. You see, our current plant of Pune plant is covering the western coast, and this plant is situated as eastern coast, so we'll cover both the coast of the country, and that will open many new doors of export. Currently, our export is mainly the volume and mid-zone products, but we will plan and we are working to cater to the other developed economies like EU and USA. The reason is we have started producing premium products in our factory, Pune factory, like side-by-side refrigerator, large size refrigerator, which is the mainly demand for these countries. So we are fully capable with the quality test and price competitiveness, and we will bring a new momentum in our growth trajectory with the help of our export business. So currently, it will be too early to comment on the numbers.
All right, but we wish you all the best for that. Thank you so much, Sanjay, as well as Atul, for taking the time out and speaking with us this morning.
Thank you
Thank
very much.
you.
All right, so that was the management of LG Electronics, confident of getting back and bouncing to the double-digit EBITDA margins and a very strong commentary for quarter four. But with this, viewers, time now to slip into a very short break. Don't go anywhere. We'll be right back.